The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the 14th of November, and look at the tails. Look at the story of the tails. Today, a long tail trading under the 9-period moving average in the E-mini. Yesterday, a long tail trading under the 9-period moving average. Day before, a long tail trading under the 9-period moving average. Day before, that was the Thursday, was that Thursday? Yep, the 9th. Look at this, smashed to the downside. 25.63 closes way up above the 9-period moving average. Now, looking at these particular tails, if the S&P, this is the E-mini, down 475 at 25.77, let me open this up. Because there's a chance that peak D is something a little more serious, and it was a Chapman Wave 5 at 2594.50, regardless of what's happening in the news that has to do with all the tax, whatever, if there is a trade, and this is, let me go through this one at a time. You see this candle here is a little bit like a Chapman Wave Roman candle. What does that mean? It's one of those candles where you light it's got the long stick and then you've got the body. You light the fuse and whoosh, that's what it does. Whoosh, and then it blows up. And that's what we're looking at here. So years ago, I discovered this particular technique. And the theory is that if at a high, it has to be at a recovery high, it has to be at the higher end of the move. If there is this Roman candle, if there is a trade that holds for about 120-minute bars in the middle of the wick, and that in this case would be right there at about 25.73, we've been there 3 times in the last 3 days. We just haven't sat around. But at any point, if the 25.73 level is hit and the market starts to hold there for, I want to say 240 bars. It really could be 120-minute bars, and then just a little above, and then the third 120-minute bar goes below. So maybe 2 out of 3 consecutive 120-minute bars. There won't be enough for the rest of the day. But if we're looking at this, I want to see a trade that goes into the 2, 5, 7 threes and then starts to fail. Regardless of what the background news could be, that'll suggest 25.63.25 is on its way. It's almost got there today, though it was 25.64.25, listed by 1 point. So that's, and earlier on, we had been down for quite a bit. So it had been at that level. So we missed it by a point, but it's still active. Let's put it that way. Most importantly, look at the 9-period moving average finally turning down after weeks and weeks of going higher. The MACD is very negative. Stochastic is now under 80%. At 75%, the technicals are suggesting, regardless of what the price, the news, regardless of what the news background is, the technicals are suggesting that there should be lower prices, lower lows and lower highs over this particular period. It's just that background noise that keeps pushing the market up. But technically, this is very poor on the daily. The weekly is still very strong, has been strong, but we're going to watch that run real closely. Now let's run the numbers. Here we go. INDU, the Dow, trading at 23,383, down 55. 23,444 is the 9-period exponential moving average for, it closed down on the 9th, I believe. Yep, it closed below on the 9th. It was lower on the 10th. Yesterday, it went right to the 9-period moving average and pulled back. And today, it's way under. It's gone to a leg B to the downside. I'd shown this to subscribers in my other charts. But look what happened. It tested the left side, 23,281 or something, high, a low that was made way back in October. and means we're starting to get those lower lows and lower highs. Okay. Now, so the resistance today is 23,444. That's the 9-period exponential moving average if there's a sudden burst of news. At this point, still looks to me like we're going to be going lower. S&P, SPX.X, here we go. S&P down 7 at 2577.78. Made a peak G/C. I believe that's probably a peak G. I need another day or two to confirm it. But 2582 is a very strong resistance. And it did not break. Wow, it was close. 2566.33 was the low of the 9th. 2566.56, 27 or something cents higher. And the MACD and stochastic are still very negative. I think it's going lower. That's the way it is. Those are the parameters. QQQ, NDX 100, trading vehicle, power shares. The 9-period moving average has been fantastic support at 153. I believe it's at 153.20. We're trading at 153.36. Made a peak F/B. I'm almost sure it's going to be turning to an F. The MACD is turning down. Hasn't crossed negative. And the stochastic still good at 90%. So far we're using time rather than price in the QQQs. This is the strongest of all the indices, the major indices themselves, not sectors, but indices. And we've got this weekly chart still very strong. Parameters to watch: a close below 152 says, lower lows and lower highs is the name of the game for this week. And above 154.20, I'm very impressed. Let's go on. We're going to go to the IWM. I had questions about the IWM. Yeah, the IWM is still weak. The technicals are still very weak. And any bounce, because of the 9-period moving average on the weekly at 146.71, it's trading at 145.79, down 82 cents. I suspect that the IWM, let me move the 120-minute chart out of the way. I think the IWM is our benchmark for the leading index that's weak, whereas the SMHs and the Qs are the indices that are, the Qs are the index that's the best. The sector is the SMHs, and we'll get there in a moment. So the IWM is still headed down. It's 145.80. If it takes out the low of 145.28 made on the 9th, that really impacts the weekly and says upside now limited, even if there is a bounce. All right, let's go on to gold. Gold had a nice little rebound today. It's up. Nope, it was up 0.50. Now it's up. Now it's down 0.60, right on the 9-period exponential moving average. Now I think gold is still in the chop. I've been talking about that for a while. Area. I'm not sure that it's going to break, but I can just tell you this. I said yesterday, move above 1283 to 1286. That resistance punching through would be very positive. It's having a tough time. But wait a minute, tough time. Let me just show you the silver is same sort of thing. It was a tad stronger. Now it's just kind of sitting on the 9-period moving average. Not looking very good. If at 17.005 down 0.04. Let me get to the dollar. I want to show you this. The dollar, which we are still long. I think we're still long because we've got another vehicle that's using it because we got the low of the 8th of September, the exact 7th-week low. But this is a very sharp move, down 52 cents, 1997 after peak C1, C2. I'll talk about that when we get back. Basil Chapman, Dow's down 50, S&P's down 7. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman has just announced a special subscriber event taking place Monday, November 20th from 5 till 6:30 p.m. Eastern Time. What can you anticipate for 2018? In this 90-minute webinar for subscribers to Basil's daily trading newsletter, The Opening Call, he will be discussing a variety of topics for the coming year, including, can high techs continue to lead? Will the financials be affected by yields, and where will yields be in 2018? The chances for inflation or deflation, what stocks could be affected or weakened in the coming year, as well as Basil's long-term outlook for the dollar and gold, as well as many other topics. For all the details and to sign up for a 30-day free trial to The Opening Call, visit the front page of TFNN.com today. With nothing to risk, this is a great time to try out Basil's daily trading newsletter. Sign up today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. So yeah, there's an E-mini, the 10-minute chart. Made a peak E at about 3 o'clock yesterday, or the 13th. Well, over there, you're right. Sunday, was that Sunday night? Monday? Tuesday? Yeah, today's Tuesday. All right, and then keeps coming down, lower lows and lower highs, a couple of peak Ds there, and it plunges this morning down to the 25, what did I say? It was 25.64, 24 level, and now it's having a nice rebound, a very strong rebound, and it's done that before with the MACD and stochastic rallying. MACD and stochastic rallying, there's just one difference. That rally, the second one, took it to right there. So that took it to the E-mini to a leg B. So far, we've not made a leg B. We've used up more time. So I've been watching this closely because the arch formation is the name of the game. So the parameters to watch at 25, we're at 2576.25 in the 10-minute chart of the E-mini. If it breaks about 2578.50, no. If it breaks above 2579, that's very good action. It should go higher. And if it goes below 2573, that's not a good sign. That'll probably go lower. But so far, chop, chop, chop sideways. All right. So the question I had was NG, which is natural gas, made a peak A in the Chapman wave methodology from the low that it made. That was the 5th, I believe. No, the 1st. The 1st at 2.847. This is the continuous contract. Rallies to very big rally, 3.231 on the 13th. Pull back very sharply today. The question is, will it fill the gap? And my answer is based on the weekly chart that it probably is going to fill the gap, but it is trying to form a base, and that base really should have a support just about round about 3, between 3 and 2.95. That really, if it takes that out, you're going to have to wait. But if it can hold, if it could touch that level and then bounce quickly, that'll be a very positive sign. If it touches that level, can't do anything, and then goes lower, says, nah, natural gas has to wait. Crude oil, we haven't got to crude oil. Crude oil right now is down 1.245. This is a very serious pullback from a peak E with a silent doji on the, that was the 7th of November at 57.69. Next day goes to 57.92. Following day, lower high, and that makes a peak E. MACD turns down sharply, still good, but turns down very sharply. Stochastic is right at 80% almost ready to go under 80%. It's the weekly chart that was so spectacular. It went from peak A to B to C to C, constantly trying to walk the 9-period exponential moving average. My thinking here is that if it doesn't hold the 55s, it could be a real quick trip to the 53, 52 9-period moving average support. And that would be a disappointment because it starts to get that monthly chart to look like a failure. So if I just to add this TRCCI, that's the commodity, the Thomson Reuters Commodity Index, which has the same chart formation, a peak E, same date on the 9th of November, pulling back quite sharply, peak D in the weekly chart, leg D in the weekly chart. I have to wait for Friday to call it a peak D. Technical is still very good, but it does suggest that it could be pulling back just a little bit. And if I look at the DBC, which is what we have, we've had it for a while, since August, I believe. Let me just double check. Since long position since August the 28th, August, September, October, over 2 months. What we're looking at, it went to 16.55 peak D, made that rectangle formation. I said, you got to be a little careful here. And now it's pulling back sharply. I've raised the stop quite a lot, so that we really guaranteed a nice, not as good as it was at 16.55, but still a very nice gain. And we can always get back in. I'm watching this closely. I think it's actually done its job. Looking at the dollar DXY, the DXY trading right now also sharply down at 94, down 49 cents, made a peak C1, C2. Remember, that's the Chapman wave notation. I'll be discussing that in my all-day webinar. Oh man, I haven't had one of these for ages. I'm really looking forward to it, coming up in December. And that's going to be discussing these particular techniques, the wave count, left side, right side price, time match, peak Ds. What do you do? The instant restart. And I'll be sending out beforehand for all of those attending. I'll be sending out charts with a kind of a glossary of terms that we're going to be looking at. Really educational, and educational just for your quick trades. This is educational for the overall spectrum of looking at markets in all the different time frames plus money management. But in the meantime, on the 20th, this coming Monday night, I'm doing a webinar, and that webinar is going to be right here. So opening call subscribers, opening call subscriber event, November the 20th. This is just for opening call subscribers, but this is a fantastic time to be able to get that for free for 30 days. And then you will automatically get my webinar that you can review as many times as you want for the month. And what it is what can we anticipate for 2018? I mean, look what's going on here. Every indication says, technically, we're looking at enough information that said the Dow at this particular point, instead of being at 23,397, should really be testing the 23,100, 23,000 level. Same with almost all the indices, not quite the Qs because there's still some strength. But the rotational aspect of corrections has seen to it that the Dow is holding well and it keeps popping back quickly. And so the subscriber event for me is going to be a real challenge. I'm trying to put the whole picture, panoply of different aspects of the market together to be able to formulate something that's not just a news event. It's going to be something that I hope is tradable, like almost all our webinars are, where I try to look for positions. Sometimes we take them a little before, sometimes the next day. I think the NBC, I took the very next day after my webinar. I can't remember now. But we usually take positions, and those positions sometimes are held for quite a while. So I'm hoping that this is going to be both lucrative and informative. I'm doing my best to do that. I have to whittle down now. I've already got so much information. I'm going to try to make it as comprehensive as possible. Monday night, November the 20th, 5 o'clock till 6:30, free webinar for subscribers. If you aren't a subscriber, you can still come in and get my newsletter for a month. All right, let's get back to our nitty-gritties here. We're looking at looked at the dollar. Now, the TLT, this is very important, because the TLT is trying to worm its way high. I say worm its way because it keeps trying to do that, and then bam, suddenly yields bump up. So this is what I'm saying. At 125.02, up 66 cents, my contention has been, it actually still is, although the market hasn't heard my contention, and that is that if yields start to come down And the TLT, the Lehman iShares 20-year Treasury Bond ETF, trading at 152.02. If it's able to get back into the 126s, that's when our market should start to pull back. We'll see. It's going to be a tough hoe to row to hoe, whatever. But in the meantime, it's just chop in the range, and a close below 123.50 at any point in the next 3, 4, 5 sessions says, yields are going to go much higher. And let's look at this. You've got the 30-year in that arch formation. You've got the 10-year TNX in that arch formation. But the 5-year, oh my, I need to do this in 20.89, 20.92, has gone to leg C. We have a divergence here that might be very important. The 5-year is rallying sharper than
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back. And we're looking down 45, S&P's down 6.5. Look, that 5-year this is the FVX cyan-colored 5-year T-note yield, new high this week. And that says it's in leg C. Leg C says it should really go to a D. So now you've got a divergence. This is going to be something that is going to start to impact the market later on. This doesn't happen immediately, but somewhere the flattening and then the change between the 5 and the 10-year, and then the bigger change between the 5-year and the 30-year. This is all going to impact the market, but maybe a little later. Meantime, back at the ranch, look, The iShares Global Timber and Forestry ETF WOD is pulling back after a peak E, but the HGX continues to go higher, and that's the housing sector index. So we've got divergences all over the show. The IYT, the IYT is the iShares transportation index. Look at this, down at the lows, trying to turn around, but flattening out in the stochastic. MACD is still very ugly at 171. This is going to be very important. You've got a peak E potential and a Chapman wave 5 in the transportation index. I'm trying to put the whole package together. I know that there's this whole thing sitting out there with the taxes, and boy, you just need to get something really positive. This market could leap to the upside. But I think that the Democrats have actually been emboldened, and I think they're going to put interference in the way here as much as they can. And the Republicans, there's enough interference within the Republicans. They don't even need the Democrats. So I'm thinking that there's going to be some kind of a delay, at least something. A spanner in the works. We had an English expression, something like that, a spanner in the works. Someone, as you're riding along on your bike, someone throws something that goes into the spokes and kapoom, you turn over. Well, this is what's happening here. So I'm looking at this askance. Let's just put it that way. My bias now is to be looking more towards the short side and carefully, cautiously on the short side, but short side it is, at least for now. No, okay, let's go on with our nitty gritties and a bunch of questions. TJX. Now, this is a, I think, did I speak about this yesterday? Why is it not notated? All right, doesn't matter. So from the TJX, one of the really fine companies that understands the retail business really well, because they have TJ Maxx, Marshalls, and Home Goods, all within like 300 yards of one another here in Newton, Massachusetts. So, of course, I happen to know them. Schlepped to TJX and Marshalls and Home Goods. But Home Goods is a fascinating place. I must have spoken about this. I met this woman a couple of summers ago. She worked for TJ Maxx. She was at the Home Goods. She was a buyer for Home Goods, went all around the world. And it was just fascinating to listen to her, because I've always been very, very impressed with the esoteric quality, but the look they have. They're able to get that little extra price edge on stuff that looks like it should be worth much more at Home Goods. And yet here we are, TJX at Lowe's, having made, not Lowe's, but I mean LOWS. So it goes to a peak A. Let me show you something here. This is the latest monthly from 2014. It goes peak A, B, C, D, E, and then it turns down sharply, makes an arch formation. And this arch formation is suggesting that, whoa, under the 9-period moving average in the weekly of 67.73, underneath this is the, look at this little dashed line here, right here, moving average, exponential. This is a 50, yep, it's a 50. This little dashed line right here, the monthly went to a 50, the weekly went to 200 period, and it's just gapped down 3.59 today at 67.17. This is a problem. This is a real problem. So what I'd say to subscribers this morning, I featured, look, if you're interested in just an overall newsletter that gives you, delves into all the aspects that at least I believe are important, my newsletter went this morning to the RTH. And what I said was that the RTH, I hope I can find it. Let me see if I can find it. There. Isn't it? Okay, that's it. There it is. So I featured the RTH. Here it is in my newsletter. The charts start coming out 6 o'clock, 6:30, 7. I start sending charts out. 8:35 is the last chart, my Trader's Corner. So this is the RTH. And I mentioned, I say, featured as I mentioned yesterday on my show at noon, the RTH Market Vectors Retail ETF, which has the broadest of components. Oh, featured yesterday and on, I knew I'd mention it in my newsletter. Unlike the XRT, the S&P Retail ETF, the up spike to leg F/C yesterday and slide to the low has the potential candlestick pattern to have made a near-term top, but that is if there is a follow-through, if there's follow-through selling today. Simultaneously, there were a number of retail and defensive stocks, not defense, but defensive stocks, like a Coke or a KO, or Kellogg's or a Coke, or a GIS, which is General Mills, not in the RTH, that are interesting. Waiting a day to decide strategy. So there it is. The daily leg F/C, MACD strong, stochastic strong. On balance, volume screams to the upside, but that looks like it's getting to an overbought level. And the weekly chart just snuck above the previous peak D high that was in April, May this year. And it makes a V-shape, a cup, deep cup or a V-shaped pattern, goes to new high, but a candle said, whoa, the pullback yesterday was not good. And then leg D in the monthly, and that says, be a little careful here. So that's what I show. This every day I show these things in my newsletter. Here is the daily. This is the daily part for the newsletter showing this particular thing. I'm showing that the 9-period moving average was resistance. The red is the 20-period exponential moving average. I show it in a different way with the MACD, the two Dow dailies, but this has the MACD and stochastic. Both of them are failing. Just a comprehensive newsletter. I try to cover as much as I can. I take a long time. It's not a 10-minute newsletter that to make. I actually take a couple hours. I take a good few hours every day because I'm going through all these different things. All right, so there it is. Gap down today, down 36 cents at 83.14. High yesterday, 84.21. No big deal. But wait a minute. It will be a big deal if there is a follow through to below 82.72 in the next few days, going to the weekly close. So yeah, that's very important. RTH. Market Vectors Retail ETF. It's a very important moment for it. Now, I was talking about the charts. Look, here's the 120-minute chart. It made that leg F to the downside this morning, and now it's having a rebound. Oh, I forgot all about that. 23.271. So it had to go below 23.271. It had to go below 23.310 for Chapman Wave 5. Whoa, put my little circle in there. That says, yep, there could be, I forgot all about that. Gosh, it would happen so quickly. Now you've got the chance for a rebound from a leg C, a trough C in the 120-minute chart. That makes 23,426 to 23,440 is really strong resistance. I'll be back. Basil Chapman, for a look at Bob and GP and Julie and Sarah's questions.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
M, which is Macy's, and XLU. S&P Select Utility Spider Fund. I've got this as a leg F in the monthly chart. Technicals are very good. Technicals are good, not great, but they're good in the weekly. I've done this a little quickly, a little too quickly. I've got this as a leg C, but my eye says I've just seen so many of these charts lately that have these Ds and a very quick consolidation, either at Chapman Wave Instant Restart. Remember, folks, I'm going to be doing this in my all-day webinar coming up in December the 8th, the Instant Restart, and to say that this could be an A, B, C, D. Either way, this is very good action in the utilities. The XLU up 57 cents at 56.73. Right now, I have to say that at 56.74, 55.70 to 55.20 should be a containment area for a pullback. This is, I looked at it the other day. It was somewhere over, actually more than the other day. And I thought, oh, put this on your list. And it just kind of slipped my mind because I look at so many different things. I'm not sure I would have bought it because I had an alternate count, but it held the 9-period moving. It's walking the 9-period moving average. Now it's leaping. That says, now you got to be a little bit careful. So the question with Danny, yes, XL, if you're in the XLU, I would do this. I would have a stop on a little small position. And I found that for my subscribers, we've been taking a little tiny bit off stocks, anything that we've had that has had a really big gain and has been to our benefit, because when there's been a pullback, it's gone underneath that area that we took the little profit from, and that gave us a bit of a cushion. So I'm just going to say 55.50, I would take a little bit off. I'm not sure if I would even add it back just yet. I'd wait probably 2 weeks to see how does it handle the 55s when eventually this has a pullback. So far, it looks really good. It's telling us a lot about what's going on in the market, that there's a divergence between a whole bunch of things. And if you're in the right sector, you don't care about the sectors that are weak. If you're in the weak sectors and you're short, you say, I don't really care about the strong. But there are 2 or 3 divergences in different areas of either the IWM being weak and the New York Stock Exchange, and the Qs and the semiconductors having held very well. And you can go through a whole bunch of different areas and you'll find the same sort of thing. So I'm looking at this question is, so that's XLU. M, it's becoming more interesting here. Had a big spike up. Boy, that weekly chart is saying, man, that's a struggle at 19.51, up 18 cents. I'm going to take a few days to think about it, because a mistake here could really cost you. If there's any bad news, it could be like General Electric, could be down at 17s in a split second. I love what's going on in terms of the retail the internet, Amazon, everything. And now all of a sudden, you've got a couple of the bricks and mortar stocks actually looking like they really are desperately trying to get everything together. So all I'm saying is, if you are going to take a long position in Macy's, make it small and have a stop around about 1850. It's at 1915. This is my opinion right now. And if it takes out 20.50 in the next 3 days, I think that's you've got yourself a stock that's going to go higher. Next thing I wanted to look at was, so that was that. I did that. Oh, the TJX was also with M. I didn't see that. So we've covered that. Bob, DK, is that Dick's? I've only been, there's one on the way when I go to my indoor tennis. Occasionally, maybe twice I've been in. It looks like a big store and people seem to know what they want, but I've never seen it flooded with people. Man, this is a horrible chart. 24.47. What is the question? New lows to come? Yeah, new lows to come. I think this is a terribly difficult area to be in. Dick's Sporting Goods just, yeah, it could have a bounce, but a lot of basing has to be done. DKS down 1.53 at 24.75. Question I had was AAP. Unbelievable. Last night, I suddenly saw AAP on the ticker go by, and I thought, oh, I haven't looked at that for a long time. And I looked at it, and this is where it was, right here. So I did my analysis. Of course, I'd always done my analysis, but I did it all over again. I did the monthly chart, and it was right at the 200-period exponential moving average for the third time in 4 months. I thought, hey, that's good. I looked at the last 4 days. I love the action. And I thought, for a bounce, and I put it on my list, my own personal, not my newsletter list. I just put it on the list as a potential. I wanted to see if it pulled back a little bit today. And if it did, I was going to have another look. Hey, pull back. It's up 15 points at 97.70, up 18%. I'm not sure if I noticed it because it was up a little bit yesterday. I thought, oh, I haven't looked at it for a while. But you remember Orly? I've been negative on all this whole sector. We've had some short positions, but we missed out really on Orly because that was my favorite at 292.84. It made a top in July, a peak F top in the monthly. I said it was a hat trick top, and it plunges from the 292 area to the 171. Was it 169 area? I would say that's a pretty big pullback. But what was it? Oh man, what was the other one? So it's all O'Reilly, AAP, GP, something. And what was my favorite one? The other one? Oh, T something, ASIO. There it is. I knew someone would be getting it. Thanks, Dana. ASIO, 819 down to 500. Wow. So it has a big spike. So yeah, these guys are just so overbought. Oversold. And I think that we're looking at a situation now where, because of all sorts of things, I think the public are kind of a little, they are buying new cars because General Motors has had a fabulous move. Our buying General Motors is still in place. I think there's something going on here that says that there could be a rebound in the auto parts area. And if I look at I don't have time. We'll do that tomorrow. Just someone remind me to look at CTAS and race, but I can't do it now. So so we've covered that, DKS and AAP. GT wants to know about BAC. So BAC's had another big pullback today. It's trading down 23 cents at 26.16. Not a big pullback. It made a high double top at 27.98 with a 27.96 following a Chapman Wave 2-bar reversal, peak E. Comes down to the 26s. I'm watching it closely. I'm not taking any risk. I've raised the stop on our position. I was thinking I'd like to have another position. I don't know yet. I think that the XLF, I think that the banks need a little more time before they get their next big move. And that's my thinking right now. Have patience. I think we're going to get a much better buy on some of the banks. Next, SWN. XOM. Okay, let me look at XOM because I know I've done that. XOM trading at 82.33 down 56, made a peak G in the daily, a B in the weekly retracement, a gray B under the 200-period moving average. The question should be, is Exxon a dividend buy, a buy and a hold because it's going from the 82s to the 92s? because that's kind of what it likes to do every once in a while. No, I don't think at this particular point, I think it's too risky to think of it as a more intermediate term buy and hold as a dividend play. I would like to see one more pullback, and if it can hold the 81s over the next week and a half, I might consider it. It's getting tougher for those dividend plays. Look, Verizon, these guys, all the dividend stocks are just getting clobbered. Hey, what's happened to my DOT, which we don't have?
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So, Sarah wants to know about GE. GE, just have patience. There's going to be time. GE will be back. But this is just a horrible act. I might be wrong because I don't really do this very much. I just do it kind of by ear. But my thinking here is that the PE for GE is just way too optimistic. Maybe down in the mid-teens. It has to hang around here for a while to build the confidence back. So just be careful. There are so many other stocks. If you were short GE, I'd say, you know what? Now's the time to be taking some profits, and you can keep at least a core position short. But I don't know what the question was. So the next thing is GE. And Caterpillar. What about Caterpillar? Let me see. Caterpillar, I might have to make a new Dow Quartet. Caterpillar is holding well. It's up 69 to 137.22. And that's exactly what I was saying before. This is a diverse type of market, bifurcated. It's actually trifurcated because I can give you sectors that normally would be bouncing and they're not, like the IBB, down 6.78 right now. Oh, I wonder if Ben is still in those positions. I believe he had gone short the IBB. Well, congratulations, Ben. Sorry, I didn't take your call yesterday. We got a little confused here. No, everyone was there. They did their job. I just could not get into my IM the way I usually do. So SPY, the question was SPY. I think SPY is making an H formation if in the next 2 days it takes out the 256.36 low. That's a real problem. I think it's going to if it does that. But if it takes out yesterday's high, I have to just say, you know what? The 258.59, if it goes above there, is down $1.15 at 257.18. If it takes yesterday's high out, I just have to say, you know what? This is the Energizer Bunny. It's just going to be, it's almost impossible to say that this is going to be a market that breaks down. I do think it's a consolidation, and I think that's what we're looking at. We're looking at a rotational consolidation. So just to quickly sum up before we wrap up, so the question is for subscribers, what do we have? We have long positions that we're still in. We've added 3 short positions. One of the shorts for people that got in a little late, we weren't able to trade before the market. They got in. I think they might have been stopped out. It's a shame because it was by a penny if it was. But our position that we got pre-opening the other day, still looking very good. So
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.